Hey there, this is Dan Rawich. I am the CEO of University of Options. Welcome to my course. It's time to stop losing money. Let's quickly kind of go through what the outline of the course is going to be. I think you're going to find this real game changer in your trading. Of course, you'll have to apply what I'm talking about. Some will, some won't. Hopefully, you're one of the ones that will. So, tell you a little bit about myself. Who's this course really designed for? We'll get to that. Why do people lose money anyway when they're trading stock or options? And the premise that I've developed some time ago is that slow is fast and fast is deadly. I'll explain that as well. The importance of paper trading, over trading, what the symptoms are, and what the cost is. FOMO. Now, FOMO leads to over trading. Rules are rules. If you follow the guidelines, and we have empirical data from our members that those that follow the system make money, those that stray, try to get creative, do their own thing, they don't make money. Sometimes they do, but not regularly. And then I'm going to show you a highly unique and highly profitable setup that's a part of my actual proprietary system called FlightStation. And since I can't give you FlightStation, I can at least give you some of the guts of it that really, it's enough to make money, that's for sure. All right, so first of all, a little bit about me. I've been trading for over 40 years. I started trading when I graduated college, and I worked for Bear Stearns in New York as a bond trader. Great career, lots of money at a young age, but a lifestyle that was not for me. If you've seen the movie Wolf of Wall Street, Wall Street in the 80s was pretty much like that. It was obnoxious, actually. For some people, it might have been really cool. For me, it was not. I founded numerous companies. Most notably is a company called RPM, which was sold to a company called Finet, which was a public company that I later became CEO of. And that company actually reached a $1 billion market cap under my watch. That enabled me to retire early at about 40 and get me back to sort of my trading roots. I'm currently CEO of University of Options. That company was founded about 5 years ago. We've had amazing growth. We have incredible members, and it's my life's work all in one place, all in one what feels like a family. I now call it a tribe. Actually, we all support each other, and it's pretty cool. And then I wrote a book called Magnetic Wealth, which really would be helpful for you. And by the way, I'm not trying to sell my book. I think I make a whopping $2 off every copy that's sold. The publisher gets the rest. But I think if mindset's been an issue with you in your trading, this book could be helpful for you. I'm obviously a trading coach. One of the greatest pride and joys I have in doing what I do and having several hundred members is the ability to really work with them one-on-one and help them turn things around. And then I developed FlightStation, which is a very proven and it is a winning system. And we have all kinds of proprietary empirical data that supports that claim. All right, so who's this course for? First of all, if you have zero experience and you don't know what options are or you don't know what trading is, I'm not sure how good this will be for you. You can obviously watch it and decide for yourself. I think this course is best for people that have actually started trading, either new or experienced, and they're just tired of losing money. As you know, most traders do lose money. Most retail amateur traders, the pros make money all the time. So don't ever believe anybody that tells you you can't make money trading. You can, and I'll show you. I think new and experienced traders that just want an edge. Maybe they win sometimes, maybe they lose sometimes, and they just want consistency, and they want something that they can trust and feel confident with. They want to know when they click enter on that trade, they're not going to have a bunch of anxiety and have a bunch of things go the wrong way on them. So that really goes back to the point I just made. Consistency, in my opinion, is everything. If you don't have consistency in your trading, you're going to have anxiety. You're going to have all kinds of illnesses to a main symptom, which is a lack of certainty. All right, so first I want to kind of talk about the mind game a little bit. Why do traders lose money? Well, there's a whole bunch of reasons, obviously. Number one, and you can kind of decide where you fit. And I would say maybe many of these might fit you. Number one, they don't have a system. They just don't. They just think, oh, it looks like it's going to go up, or it looks like it's going to go down. And as absurd as that sounds to me, and maybe some of you, believe it or not, is the majority of traders, particularly brand new traders. They come into the business, they've watched some YouTube videos. It sure sounds easy. Just pick the direction and go. And it's amazing how many accounts are blown up. I've heard a stat. I don't doubt this stat. I just haven't necessarily validated the stat that 90% of all traders will blow up their account at one point or another within the first 12 months. There's no reason to do that, guys. And I'm going to show you simple things to do to avoid you ever blowing up your account, and actually ever even having any kind of a drawdown. Drawdowns are not acceptable. If you started your trading business with $5,000, you shouldn't go below that. If you go below that, you shouldn't be trading yet. And we'll get into that again some more soon. Actually, I'm going to back up for a second. So that's one. No system at all. They just get in there and start trading. Number two, they don't trust the system. They'll maybe have a system wherever you found it. Believe it or not, there are hundreds, if not thousands, of simple ways to make money trading. But yet, as soon as we take a couple of losses, we scrap them, we go on to the next thing. And this becomes a very slippery slope over and over and over. You're in a system, you're out of a system. As soon as it lets you down, you're out of it. And what you're not realizing, it's not letting you down, you're letting you down. It's right here is the reason that a lot of these things just don't work for you. So that's number two. So number one, again, is no system. Number two is a system you don't trust. Number three is probably the worst thing of all, and I have a whole section on that, which is over trading. Number four, FOMO. And FOMO and over trading are first cousins. FOMO is a fear of missing out, and it's when we feel this horrible need to jump in early, or worse, no, not worse, equally as bad, stay in even though you're up and you think you want to be up more. And without looking at the chart or coming up with any other determination, you just decide, I'm going to stay in because I want to make more money on the trade. That's a killer. Number four, attitude. If you go into your trading, the analogy that I have is golf. At one time, I was a pretty big golfer, not necessarily a great golfer, but a big golfer. I played every day. I wasn't terrible, but a lot of my friends were way better. In fact, the joke in my group was that I had the ugliest swing in golf. It did somehow, how does he score so well with that swing? I have an excuse. I didn't start golfing until I was 27. And, a lot of my great golfer friends, they started when they were kids, and they get that swing grooved. Also, the person that taught me how to play golf, Bob Rovner, he's a spine surgeon. Amazing golfer. He taught me virtually everything I know about golf. And one day I was having a terrible day. I said, what am I doing? And he said, I don't know. Your swings are like snowflakes. No two are alike. So when I use golf as an example, no, I'm not coming at you as like the world's greatest golfer. I did get my handicap down to a 12, but again, it was an ugly 12. So here's what I learned about golf. Golf is probably 70% here and 30% actual ability swinging the club. Actually, swinging the club is not very hard. I had a pro once tell me I had one of the best looking practice swings he's ever seen. And then he said, what the F happens when I put the ball in front of you? It's like, you're a different person. I don't even understand that. So that just told me it's here. Everything is here. Like, I watched a few videos and you can groove a swing. It doesn't take that long. But if you don't have the right attitude and you're not relaxed about it, you're probably not going to be a great golfer. So what I learned is perhaps I hit a bad tee shot and it's out in the rough, maybe even some obstacles around. And my friends are all in the fairway. And of course, they're ribbing me already. And I'm just not happy. And when I walk to the ball, my posture is, hunched. I'm angry. I'm tight. And I have what my friend called bad golf posture. When you're angry, your posture is different than when you're relaxed, right? You're tight, your shoulders are tight, you don't look up as much. It's just all kinds of different things physiologically going on with your body when you're upset than when you're happy. It's a big part of anything. So you walk up to that ball with bad golf posture and a bad attitude, and you're in a bad spot. What are the odds that you're actually going to hit the ball out of there straight and nice? You don't have to be a golfer to understand this metaphor. I don't think you have to be. Just go with the point. So I think that there's bad trading posture just as well. And when we get upset, we lose objectivity. We can no longer trade. And so while golf might be 30% physical and 70% mental, I believe trading may be as high as 95% mental. And yet very few people spend enough time on the mental aspects of their trading game. They want to learn every trick in the book. They spend all their time looking for this magic system, this holy grail, this thing that's going to get them rich, but they won't work on this. Hopefully that's why you're here right now. You're ready to work on that. Revenge trading is the worst thing you can do. It is the fastest way to blow up your account. Of everything that I could ever talk about, revenge trading is the worst thing you can do. We had a member, and this wasn't very long ago, and this is really heartbreaking, and I'm going to be transparent and vulnerable in sharing this with you, because I'm really proud. Our members do make money. We do make money almost every day, and we live trade together in a trading room. So they know I'm making money, or if I'm not, and I know what they're doing because we're watching each other in this room. Well, so we signed up this new member, and he decided not to watch any of my videos. Our course is like a 30 module course. It's pretty intense. And it's designed really for people either with experience, but also with zero experience. So he doesn't watch any videos. He gets enough, I guess, to be able to understand how to open a brokerage account and how to get his chart set up. He doesn't go into my live trading, and he doesn't go to any of my live classes. And after the second day of being a member, he says, "Can I have a refund? This is not for me." And I was stunned. Honestly, in 4 years, I think we've been asked, maybe 2 or 3 people have asked for a refund, and never, in the first day. Like, how's that even possible? How'd you even know if this is right for you? And that's what I asked him. And he was emotional. He wasn't angry, but he was emotional. And he said, "I don't even want to tell you what happened." And I said, "You have to. I mean, I can't help you." He goes, "Dan, all due respect, I don't want your help. I just want to get my money back, and I want to get on with my life and forget this ever happened." And I said, "But that's terrible. That's no way to leave something behind that yesterday was a dream for you, something you really wanted to do, and you had a bad day. I don't care how bad that day is, to scrap a dream over one day. Jeff, it doesn't make sense to me." So I made a deal with him, and gave him some objectives to strive for. And I did tell him, because the course, we not this course, but I'm talking actually our membership, it does have a refund policy. It's a very specific refund policy, which he didn't meet any of those criteria. But I said, "You're really upset. I can tell this has been a terrible experience for you. And I'm going to tell you right now, and I'll put it in writing, you can have a refund. I just want you to do this for 30 days. And I don't care if you paper trade, but you're going to trade very light." Let's go back. I didn't tell you what happened. He lost $25,000 in one day. Now, when I hear about a member even losing $250 or $500, that's upsetting to me, because we're not supposed to lose money trading. Yet somehow people think this is an acceptable behavior. It's not. So this is on the day the Fed gave the interest rate decision, and our group, when we're trading, we're out. Anywhere around that Fed announcement, we are out. We're not going to be live trading. We're not going to be opening any swing trades. We're probably going to close all the swing trades we do have open. I'm on the sidelines because the Fed has the ability to interrupt the market in ways that most people can't even imagine. And this guy somehow thought part of trading, and you probably think this too, that part of trading is having a hunch about what's going to happen, or thinking, oh my gosh, Apple's laying off 2,000 people. I just read that in the paper. Oh, I bet you their stock's going to tank, so I'm going to short it. No, it just doesn't work that way. It doesn't work that way. By the time Apple laid off 2,000 people and put it in the news, the big traders have reacted to that so much that move is done before you even jump into it. There are some times where we have lingering news events, and I will talk about that in a little while. But this guy thought that he knew what the Fed was going to do. And he thought, based on what he believed the Fed was going to do, that he knew which way the market was going to go. He traded 20 contracts. Now, 20 contracts is not a lot for a lot of us. It's not a lot for me, but it's an astronomical amount of contracts for a brand new trader. Don't even think about that. I don't care if you have millions of dollars in your account. Do not launch with more than one contract. And in fact, I'm going to spend a lot of time talking about paper trading, because you should not be launching unless you're paper trading first. So obviously the market went the other way on him, and it got so bad he was down a ton. And then he thought, well, it's got to bounce at some point. So he doubled down on his position. Now he had 40 contracts. And of course, it continued to fall. And now things got really, really ugly for him. So he says, I think I'll buy some calls, because it's got to bounce here at some point. And he doubled down again, and it did not go the other way. It continued to go in that same direction. This all happened in a series of like minutes, apparently. I wasn't there. I can't fully reconstruct what he did, but I know that it overtrading FOMO, fear, anger, all this stuff coming. I got to get this back. I can't tell my wife I'm down $5,000 on my first day. Oh, boom. Now I'm down 10. Oh my God. I wish I were still down 5. That wasn't all that bad. Why am I down 10 now? I got to get at least 5 of that 10 back. Shit, now I'm down 15. I wish I were just down 10. 10 wasn't all that bad. I'm sure you've been there at some point where you keep wishing the initial loss was your only loss, but you keep making it worse and worse and worse. And that's revenge trading. Revenge trading. I tell my members, if you catch yourself doing this, we just please send me your money. Just like, don't just give it to the market. Give it to me at least. I'll put it to good use. Don't give it away to a stranger. Because I'm a fanatic about that one. And I'm going to show you some information about how we put that into play when we have members that are revenge trading. Now, overtrading is a big part of revenge trading. Overtrading, so we have a rule. I'm not going to tell you that every member follows these rules, but I'm going to tell you we put out a trading survey every day. It's optional, but we do this so we can prove to the members that the people that make money only take a certain amount of trades a day. And once our members that are struggling, that aren't following the system, see this data every day, they begin to realize, wow, that's a big trick here. Just take no more than 4 trades a day. Some traders think, for whatever reason, they're day traders and they're supposed to trade all day. That's just dumb. You're not going to see a professional trader sit in front of his screen and beat his head against the wall or her head all day long just because they have the title of trader. Most of the best traders I know, and I'm in this category, 90% of my trading is done. Let's call it 80, is done in the first 90 minutes of the market open. And then I'm done. Now, we also do have, and that's where we trade live with our members during that period. And then we do come back for the last hour. I call it the power hour. I don't trade much during the power hour because usually I'm done in the first hour and a half. I'll still call out trades for my members. I might trade a couple of contracts instead of 40, but for the most part, I'm done there. So that's rule number 1. 4 trades a day is plenty of trades. When you're taking more than 4 trades, it's very likely that you are trying to get something back. You're revenge trading, over trading, whatever. And it also says you probably don't have a daily goal. I'll just kind of give you some ideas. If you just make 30 cents, call it $30 a contract. Hopefully, you know a little bit about options if you're in this course. $30 a contract is not very much. That would be like 4 trades where each trade you made 7.5 cents. We're talking about a 15-cent move in the stock price to get that 7.5 cent per share move. It's not big. But if that were my goal every day, and I personally trade 40 contracts, by the way, that is my goal. Well, that's $1,200 a day. $1,200 a day is $300,000 a year trading an hour and a half a day. And I know that sounds absurd, but it's not. And 40 contracts might sound big to you, but it's not either. The average trade that I take when I'm trading 40 contracts is about $8,000 or $9,000. That doesn't take a very big account. And personally, our system is very structured. We do not have more than one day trade open at a single time. And we only trade 2 stocks, QQQ and SPY. And I'll show you why soon. So it makes things very simple. I'm watching 2 things. I'm only sitting there for an hour and a half, and I'm only looking to take a very small amount out of the market. Some would call this scalping. I don't really care what you call it. I call it making money. So even if you were trading 5 contracts, which you could do with $1,000 per trade, 4 trades a day, you're talking about a $4,000 account tops. That's $120 a day. If you're trading it's $150 a day. If you're trading 5 contracts, 30 cents per contract or $30 per contract, it's $150 per day, which is $3,000 per month on a measly $4,000 account. Now, if you do this, the second month, you're not going to have 4,000, you're going to have 7,000. And now you're not going to be trading 5 contracts, you're going to be trading 8 or 9 contracts. And the money just magnifies very quickly. We do not, I can't stop our members. They could do whatever they want. So when I say things like when we do not allow, I would say our system, our rules, our guidelines do not allow for a trader to scale the amount of contracts with their own money. They have to scale with earned money. So if last week somebody made $1,000 on their $5,000 account, well, now they can trade some more contracts because they're playing with the house's money. But they can't up that number until they make another 1,000. But it does begin to really snowball very, 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 very quickly. So it's just some ideas there, and this revenge trading and over trading go hand in hand. And the cure for this is no more than 4 trades a day. Now, let's talk about probabilities. I call it the probability gods. And you don't want to anger the gods. And by the way, if you're religious, I'm not trying to be insulting. I'm actually an extremely spiritual guy. I have a strong amount of faith. So when I refer to the gods, it's more of an offshoot. If you've been watching any of these Spartacus or the Viking movies, what's the one that I really like? The Last Kingdom. They refer to the gods a lot. So that's what I'm talking about. Probability gods. Well, you don't want to anger them. Because probabilities are probabilities, and there's nothing you can ever do to change them. There's nothing you ever want to do to try to change them. So our system has been back tested over thousands of trades, professionally done, and we know it's got an 84% win rate. Do I have an 84% win rate with my own system? I do not. I have an associate trader named Lee, who's in the trading room with me every day. We kind of play off each other. The members enjoy the interaction, so it's not just sitting there staring at the screen. It's a little bit like a talk show, I guess. Lee was a student, and I began noticing that he was making money every day. He was outperforming any member. And during the summer, I had COVID pretty bad, and I got that terrible brain fog, and it really scared me because there was something going on. There was a disconnect between my brain and my hand. And I started taking some losses, and I got really scared that I'm leading hundreds of people with brain fog. This is horrible. Now, do I just tell them I can't trade for a couple of weeks? I don't. I was really lost. It was a very upsetting period of time for me, and that's when Lee came along and said, "I feel like I really got your system down, and I just want to let you know if you ever need any help, I'm here to help." So, sure enough, he's a stud, and we've looked at his results from the day that he started trading as a student, going all the way through now as a kind of a partner of mine in the trading room. I think this all goes back about 8 or 9 months now. It's not years, it's months, but that's enough time to know. And his win rate is exactly within just a couple of basis points away from the professional backtest we have of our system. He's the most disciplined trader I've ever seen. And that's good for all of us, good for me. Sometimes I might know too much. I might understand too many things, and it makes me want to override my own system. Well, I win a lot when I do, but it's not that good for the members to see me not exactly following my own system. So probabilities work. And so I'm just going to say, because I upload every single trade into a software called Trader Sync. It's good. It's very good. And it's important to do this because you'll learn what days of the week you make the most money. Maybe there's days where you lose money. There's certain time frames during the day where I found I always lost money. I found my credit spread trades, the win rate was just so through the roof. It surprised me even. So a lot of good data can come from that. So in looking at that data, I'm probably closer to high 70s, maybe 77-ish in terms of my win rate. But here's what really matters, you guys. I really want to make sure you get this. Profit factor is more important than win rate. We had times where we were hitting very close to 90% win rates when we were only doing credit spreads. And we had times with those kinds of win rates, barely making money and sometimes even losing money. Why? Well, I think it's a little bit obvious because if I win, let's say 80% of the time, and each time I win, I make $100. And so now I'm up 800. And then on my losses, I lose 500 on those two trades, which is easy to do. Now I'm down 1,000 on my two losses and I'm up 800 on my 8 wins. The math doesn't work. So don't let anybody get you all excited when they talk about win rate. You have to ask about profit factor. So our profit factor, again, this is verifiable. We download every trade, is 2.74. What does that mean? That means that for every trade that I lose $1 on, I make $2.74 on the trades that I make money on. So think about it. If I had a 50% win rate, let's take 10 trades. I win five times. That's half. 5 times $2.74 is about, let's just round it to $15 in profit. Now, if I lose twice, sorry, I did 50-50. If I lose 5 times at $1 each, I've lost $5, but on my wins, I've made $15. Do you think win rate matters at that point when I can make almost $3 for every dollar I lose? No, we could have a win rate as low as 40% and 35%, and we could still make money. So I just want to get that in there. So back to probability. Don't mess with it. And so if I know that I personally have a 75% win rate, just to be safe and conservative, and I have 4 wins in a row, what are the odds that number 5 is going to win? At some point, you piss off the gods because you just can't win that many in a row. I don't care how good you are, I don't care how many how great you are. And this is what I see happen a lot. You're up 4 trades in a row. You're so happy, you feel on a roll. This is a great day. I'm making money. I'm double my goal. First of all, you're just really not very smart if you don't quit. And pardon me if that's you. Sometimes that's me. And then that 5th trade. Well, we already know that we win 75% of the time. We just won 4. The odds are extreme that we're going to lose the 5th trade. And now maybe I gave back half my winnings from my 4. And I'm really annoyed. And I'm thinking, why did I take that last trade? I really want to go back to being up 2,000 or whatever. I wanted to close the day with a $2,000 profit. Now I only have 1,000. Well, it's early enough. I'll get a couple more trades in. Well, you already know how those are going to go because you have bad trading posture, just like bad golf posture. You have a bad attitude. You're thinking like a loser, not a winner. Your brain's in a different place after you lose a trade. So to get right back in a trade with that brain is a bad idea. And now you're back to maybe losing money or you give it all back. So based on that, what I just said, we highly recommend, and the members that do this make money almost every single day. 2 wins and you're done. 2 back-to-back wins and you're done. Why? Because after 2 back-to-back wins, the probability gods wake up and they start watching you, because the odds of winning the third one is much less than winning the second one. And if you do win that one, the odds of winning the fourth one is extremely low. So 2 wins and I'm done. There are exceptions to that. I don't recommend you use them unless you have a ton of experience and understand how and when to break that rule. There are times, but it has to be like the most perfect setup ever. You can't decide it's a good setup. It has to be the most, beautiful setup that you can imagine. But also, if you lose 2 in a row, you are not in a good place to be trading anymore. I'm a little bit too much of an open book in our trading room. I get pretty grouchy when I lose. I rarely swear in the trading room, but every once in a while I might even drop an F-bomb. Can you imagine that? In my head, there are F-bombs going off like crazy. So, and I'll just say it right off, that's it. I'm done, guys. Let's be done. See ya. Well, I've gotten a little better now about, like having 2 losses and then just leaving the room, because that's not nice. Maybe the members are doing better. So I do stick around and I have done a better job controlling my memo, but I will not trade after I have 2 consecutive losses. I just won't do it. It's never ended well for me, ever. So that's the trick with over trading. It triggers revenge trading, because when you trade too much, you absolutely increase the probability of a loss. That loss sparks the revenge monster, and the revenge monster sparks the over trading, and they feed off of one another. Now, yesterday was an amazing day. Yesterday was Friday, January 8th, maybe. Let's see. Nope, the 6th. So yesterday was the 6th, and the market was up like 800 points. Now, we usually don't care if the market's up or down. We just really don't like when it chops all day long. That makes it tough. But today, the market was pretty much trending all day, and those are really beautiful times. My system does even better in those environments. And I will admit, I took 6 trades and I had 6 wins. So 6 for 6. That's crazy when I just told you, we put after 2. But I also said some setups are so undeniably excellent that you have to do it. So that's what happened. So that's the one exception, but there's no exception to lose 2 and keep trading. All right, let's keep going. FOMO, I think FOMO we've really covered in terms of revenge trading and over trading. FOMO is an absolute disease, and I think that FOMO encompasses revenge trading and over trading. It encompasses fear, it encompasses greed. It's a single word that sort of covers everything. And if you think that you don't have it or you've never had it, especially if you're new to trading, send me a letter if you don't. Like in 6 months, tell me if you still believe you don't have a problem with FOMO, because you're 1 in a million. I've been trading for 40 years, and the FOMO monster every once in a while pops up and starts whispering in my ear. And sometimes that monster gets through. FOMO is very real. It's very much a disease. If you've ever had any kind of addiction issues, whether they're gambling, drugs, smoking, whatever. And I don't mean that you were a smoker, but maybe you just couldn't quit. That's a really good sign you're going to have FOMO when you're trading. It doesn't mean you shouldn't trade. It means awareness is everything. If you shine a light on it, then it's gone. But if you try to ignore it, it will get you. It'll get you really badly. So, but FOMO, and this is where the book I wrote comes into play. FOMO is a symptom, and you have to look at things in life as symptoms or illnesses. And FOMO is a symptom. It's like if you have the flu and you have a fever, well, you don't really talk about the fever. You do, and you have to treat the fever, but you also have to go and look at what the symptom, what's causing that. So FOMO, ready for this, is caused by scarcity mentality. You might not think you have scarcity mentality, but if you have a lot of FOMO, then you probably have a scarcity mentality. Scarcity mentality and trading do not go very well together. Scarcity says that I don't think there's enough. I always have to struggle for what I get. Money does not just flow to me easily. Things are tough for me. I can't win without taking a bunch of losses. Those are all like scarcity thinking. For whatever reason, it has been an issue my entire life. And I've had times where I had as much as $30 million in liquid capital when I was running the public company. I still had it. I still had it. To me, it was going to go away tomorrow. Something bad was going to happen. And of course, the more you think about that, the more you move to that. And then 9/11 came and some other stuff came, and I didn't have 30 million anymore. But that all has an incredibly happy ending. And I found even when a bunch of bad things happen, for some reason, the way I'm wired, abundance thinking kicks in. Like, hey, what am I worried about? I can always make it back. Money always comes back to me. So if it's scarcity thinking, here's what it does. It makes you think that if I don't take this trade, there's not going to be another one this good coming along. If I want to enter this trade, I cannot wait for the next candle because I'm so afraid I'm going to miss 15 or 18 cents of the move that I decide to jump in before the candle closes, which can be disastrous in many, 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 many times. Let the candle close. But if I have an abundance feeling, then I know there's always enough. I never have to worry. Money just really does flow to me. I'm not saying that to impress anybody, because I've been pretty transparent. I've been on both sides at this point. I'm 64 years old now, so I feel like a lot of this stuff has been conquered, but there's still demons, guys. So if you find yourself with scarcity thinking, you have to tell yourself while you're trading that I'm thinking from scarcity. And this is where I get a little, out there. If you haven't read any books, any metaphysical stuff, or quantum physics or anything like that, let me just tell you, there is really not much more real than the law of attraction. You will get what you think about. You will get what you believe. And I have so many examples of that being true. If I focus on not having enough, it's really telling the universe, my higher self, God, whatever you believe in. When I think about not having enough, that's my way of telling the universe I don't have enough. And they say, fine, that's what you want. I'll keep giving you not enough. You have to think about what you want, not what you don't want. And that's all I think about. I think about all the time what I want, what I want, what I want. And because I do that, I feel like I'm attracting only things that I want. And that has had a huge factor in my trading and in my members' trading, that have been able to make that switch from scarcity to abundance. We talk about that level of mind games quite a bit in our classes. Okay. So just remember, when you're feeling like you got to jump in and you don't want to wait for that next candle to close, or you start telling yourself, this looks like a great setup, I don't want to miss it. That's FOMO. FOMO equals scarcity. Scarcity equals that's what you're going to keep getting. You have to change your mindset to believe that there is enough. There's a million amazing videos on YouTube. If you could see the screen on my right now, playing behind me is manifestation affirmations. It never stops for me. Never stops. When I sleep, when I'm awake, I wrote the book. I'm constantly listening to things that increase my abundant thinking. Okay, so go to YouTube and type in manifestation. How do I get what I want? Law of attraction, and start listening to some of those and listen to them with the complete faith that they're real and that they work and that they will change your life. And of course, you're trading, because I don't know that somebody could come into trading with scarcity thinking and be successful. Maybe they'll have some good days, but in the end, they'll push it away because they don't believe either they're worthy or that it even exists. So, slow is fast. And what I mean by that is, if I want to really ramp up my trading, and I want you to think about the guy that I told you that lost 25,000 in one day, because I don't know if I put this in the next slide. No, I did not. So what I always say is slow is fast, and fast will kill you. Because if I come at something very slowly and I'm willing to paper trade, and I've got a whole section on that, I'm willing to paper trade until I'm consistently profitable. I'm even going to show you how to paper trade and how we do it. If I can't make money for at least a week on paper and prove to myself that I can follow my own system to a T, that I do not take trades that do not perfectly fit my system, I do not hold on to losers, I do not hold on to winners too long, but I do let the winners run their course. If I can't do that for 5 days, why would I want to put my real money on the line? And if you back that up, why on earth would you start trading real capital before you can prove that you can make money on paper? So I'm a pilot, and anytime that over the years you upgrade, you get faster planes, fly higher and are more complex. And each one of those planes comes with required training before your insurance company will even let you fly that plane. So you have to go through this stuff. And sometimes you're like, just tell me what the rotation speed is. Tell me what the landing speed is. Tell me what the stall speed is. I don't need to go through all this. I can figure this out. Sometimes you feel that way, but it's not a good idea. And the best way, if you're going to really make a move up, maybe from a turboprop to a jet, you're going to go in the simulator. And I think of paper trading as the simulator. And I wonder how many of you would get into a new Mustang jet without first flying in the sim. I mean, doesn't that sound stupid? When you just get in it, I don't care if you have 10,000 hours of piloting twin engine planes. Anybody that would get into that Mustang jet without first spending time in the simulator should just shoot themselves in the head, because they have a death wish. You wouldn't do it. But yet you would go into trading without doing any paper trading, without proving to yourself that something works over and over and over, and that it's so repeatable you can take it to the bank. It's so repeatable you actually get yourself a weekly paycheck. That's how good you have to be before you put your own money on the line. And now, if you can't do that, what do you think the disease is? It's FOMO. It's scarcity. It's, I got to get in this now because I got to get this money because it's going to go away. So we don't look at it that way. We look at it like there are infinite amount of setups that fit my plan. They keep coming like trains all day long. If I miss a train going to, I don't know, Philadelphia, and I'm in maybe Colorado, would it make any sense to get in a train going toward California if I missed my Philadelphia train? No, it wouldn't. Or get in a train that goes to Texas when I'm supposed to be in a Philly. No, I'm going to wait for the next Philadelphia train because I know they just keep coming over and over and over. Planes, you could use that as an example. Trades keep coming. As soon as you start thinking you have to take that trade, you have to get out of paper, you have to trade real money, then you have FOMO and you have a scarcity issue. And that's okay. Join the club, honestly, but at least acknowledge it. At least say to yourself, yeah, I'm giving into my scarcity issues. I guess I'm not ready to get better yet. I'm giving into my FOMO. I guess I'm not ready to get better yet. So I'm going to go ahead and real trade, and then I'm going to hurt myself, and then I'll go to paper. That's what you should say to yourself. So if you go slow, if you'll go 5 days, let's say, prove to yourself that you can make money with beyond a shadow of a doubt, following every rule for those 5 days, then you can trade one contract, only one contract. And in fact, I suggest it's a low delta contract. Again, I'm assuming you've gotten some options training here. If you don't, send me a note. I have like a 40-page ebook I will send you for free. Dan@universityofoptions.com. At least get the basics on the options. So I just lost my train of thought, actually. Where do I want to go from here? All right, so let's just go into the need to follow rules. Oh, sorry. You're going to trade one low delta. Low delta means a very cheap option. I tell our members, if they're new, just because I say I'm going to trade tomorrow's expiration 280 strike price and it costs $2, well, you can trade tomorrow's expiration 290 strike price and it costs 15 cents. You're still going to get the feeling of winning and losing. You're going to get the experience of executing the trade, getting in, getting out. You're going to continue to build that good habit. I'm going to share a quick story about that. Well, let me just finish the slow fast point here. So by going slow, I don't have any setbacks. Do you remember the story of the tortoise and the hare when we were kids? The rabbit was a really cocky and he was extremely fast. And of course, he could run circles around the turtle. And yet he was cocky. And I remember in the cartoon, like he would run to the soda shop and slurp a milkshake, and the tortoise just kept, creeping and creeping and creeping. And then the hare goes and visits his girlfriend, and then he does this and does that, and the rabbit is just creeping and creeping and creeping. And ultimately, through a series of events, the turtle crosses the finish line before the rabbit. It's the same thing. You have to be the turtle. You have to go from paper to one contract, from 1 to 2, 2 to 4, 4 to 6, 6 to 10. There's a formula here. You're up by 2, then 4, then 2, then 4. And we try to get our members all up to 40 contracts. And the reason 40 is even, a number that matters is when we ask most of our members, how much do you want to make ultimately? The number is usually like, oh man, if I could make 200,000 to 300,000, that would be so amazing. Well, 40 contracts can get you there very easily. In fact, 30 contracts would probably get you there. Okay. Slow is fast. Now, fast is the guy that I told you about, Jeff. He came in, he lost $25,000 in his first day. Fast is deadly, but slow is fast. Slow will get you where you want to go. You cannot be in a hurry in this game. And if you feel like, I don't want to hear that, I am in a hurry, you have a scarcity issue and you have a FOMO issue, and they're kind of the same thing. So your unwillingness to go slow is a disease, and it's a disease that will kill you. You have to be willing to go slow, because guess what? Slow is fast. If you just go slow for a couple of weeks, oh my God, by the third week, you're kind of really humming along. And by the sixth week, it's crazy how much you could be making. But if you're not willing to go through those steps, you're not going to experience that 6-week feeling. Again, it's like, would I get in a Mustang jet? No. I'd rather spend a week, 10 days, a month in the simulator, feeling so confident. I know every inch of that plane. I've landed 1 million times in the sim. I'm ready to really fly that thing. So the other thing that paper trading does is it engrades, and this is an important fact too. When you're paper trading, if you just randomly take trades because you feel like, well, I'm just paper trading, I'm practicing, so I want to see if this one works. This is just for kicks. Let's see what happens. That's the worst thing you could do. That's training your subconscious mind that anything that you see is okay to do. You can't do that. You have to train your mind to realize, I don't do anything unless it fits this perfect box. And I'm going to give you a perfect box that you can shoot for if you stick with me here. So that needs to just keep coming over and over and over in your mind. And so this brings to mind a quick story. So when you have, the plane that I had, I'm planeless now, by the way, you have to have annual recurrent training. And some of it is fun and some of it I just hate. You have to do some stuff that I really don't enjoy doing. And plus, it's not very good for my plane. So I never really look forward to these recurrent trainings. But part of that training is always going to be engine out procedures. And they're just the worst because you're flying around and the instructor tells you to practice maybe stalls or steep turns. And then when you're not really paying attention, he cuts your power. It's gone. He's like, your power's out, and it's really out. What are you going to do? Do you already know where you're going to land? You better know where you're going already, because that's part of being a good pilot. You're always thinking, if I were to go down, where do I go? And then you're going to hit 777 on your transponder. You're going to declare your emergency. If indeed it's emergency, you might just be notifying the tower. There are very specific steps, cutting the fuel, all that stuff. So one time I was taking off out of Mexico. I had my daughter and my nephew in the back of the plane. I think she was maybe 5 or 6 at the time. My nephew was maybe 9 or 10, and they were playing video games and they were talking. And all of a sudden, I heard this horrible pop, and oil just started flying out of the cowling and covered the windshield and smoke everywhere. And the engine, of course, was gone. I was as relaxed as you can't even imagine how relaxed I was. I knew exactly what to do. Although Mexico's a little different, I said, I need to declare an emergency, gave him my call sign, and need to return for immediate landing. And there's no tower. There's a guy standing on the runway with a walkie-talkie, and he says, "Okay, you want to come in? All right, you can come back." In the United States, when that happens, there's going to be fire trucks and ambulances and all. They're going to have a parade for you, on your way back into the airport once you declare an emergency. So this was interesting because we weren't very high up, and people think that landing is the most important, dangerous part of flying. That's actually the safest. Taking off is the most deadly part of flying a plane, because if you lose your engine without altitude, you're going to go down. And most airports, for whatever reason, the end of the runway is a freeway. So you need to get altitude before you lose your engine. I didn't have much altitude. We were at 2,300 feet. I need to turn back to the airport. When you make a turn, the steeper the turn, the more altitude you're going to lose. So I had to make slow, gradual turn. All the while, I'm doing everything I'm supposed to do. My daughter says, "Daddy, why are we going back?" And I turned off the speaker so she couldn't hear me talking to the tower or the guy on the runway. And miraculously, the plane, we made it back. We literally touched down on the numbers. I could barely see anything. I consider it as close to a miracle that A, we even got back to the airport, and B, I made it back to the runway. And I was like James Bond cool until I got out of the plane. I got out of the plane, my legs buckled, I went down on my knees, and I literally started sobbing. And I was thanking God, and I was just like, oh my God, I literally fell apart once I was on the ground. So how does that relate to trading? Well, I had done so much recurrent training. I had prepared for any emergency. It became rote in my mind, meaning you're no longer having to consciously think about something. Your unconscious mind kicks in and it does everything it's supposed to do. If you would have asked me at any time, what are the steps you need to do in an emergency? I'm not sure I could always recite them. But once I had to, I just started doing them. That's what paper trading does for you. Paper trading is a simulator. Paper trading gets you through almost every kind of emotion, almost any kind of experience over and over and over. But you have to paper trade perfectly. Okay, we're going to get into that in a few minutes. But rules are rules. So you should have a written trading plan. It doesn't have to be fancy. It could be, my setup is boom, bullets. This has to happen before I enter a trade. This is the time frame I trade on. These are the things that I trade. My exit strategy is boom, 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 very clearly laid out. And that's what you have to practice when you're paper trading over and over and over. Because if you start doing just random things, you're wasting your time paper trading. To me, back to golf, go to the driving range and just start whacking the ball. Just start swinging as hard as you can, trying to hit the ball as far as you can. Don't line up your shot. Don't work on your stance. Don't take practice swings. I bet you'll hit the ball really well on the golf course. Just because you're relaxing, it doesn't matter. But that kind of practice on the golf course, you're going to break windows. So you'll see your best golfers at the driving range taking as much time between swings as they do on the tee box. That's important. Lining up the shot, checking your shoulders, checking your backswing, checking your swing plane, all that stuff. That's how you have to look at paper trading. Okay. All right. So I'm going to pause this for a minute, and then we'll come back and we'll talk about paper trading.